Hello learner, welcome to Manifested e-learning platform. My name is Emily Ngwiri, and today, ladies and gentlemen, we are discussing Business and Data Analytics December 2024, and focus will be on question 21. Let's read through together. Workwe Limited is a public entity which has grown in recent years by acquiring established business entities. The directors of Workwe Limited have identified two potential entities targeted for a takeover. The directors believe that the shareholders of the two target companies would be receptive to a takeover. As a prerequisite to the takeover decision, the directors have tasked a firm of consultants to carry out a cross-sectional analysis of the financial statements of the two potential target companies which operate in the same industry sector. The financial statements of the two entities as of 30th September 2024 are shown below. The statement of profit or loss for the year ended 30th September 2024, you can see for the two companies, and this is an abridged profit or loss statement for Remi Limited and Pepino Limited. We also have an abridged statement of financial position as at 30th September 2024 for both Remi and Pepino Limited. So we have the assets, the current assets, the total assets. We obviously know that the total assets should equal to the total equity and liabilities. We also have now the equity, non-current liabilities, current liabilities, and total equity and liabilities. You are required A, common size statements of profit or loss for the two entities for the year ended 30th September 2024. B, common size statement for the financial position as at 30th September 2024. And C, advise the directors of Workwe Limited on the best company for takeover. And just as the way we've been doing in terms of the developing solutions, we will move towards the right over here so that now we can be able to develop the solutions together. And so right over here, I can be able to just talk about Remi Limited percent over here. So you can just pick this component like that, Remi Limited. Of course, I will maybe perhaps just need to move it towards the right here so that we can visualize it better, like that. And we talk about the percent. That. So once we have that, then we can bolden this, Control B, and then on the right over here, we are saying because we have both Remi and Pepino Limited like that, given to us over here, they can just maybe perhaps squeeze it right over here through. I hope you don't mind like that, because we can be able to see everything given to us right over here. So we just push this, or rather, excuse me for that, we just push this one up to somewhere there like that. So what we'll do, because we're conducting what is called a common size statements for profit or loss for the two entities, we are going to hold the revenue constant. Meaning that if I pick the revenue and divide that against the revenue, which is going to be common size statement over here, and we lock the denominator, F4, like that, we are going to be realizing a percent. So here we are saying if I can just allow me to maybe perhaps put it as a percentage like that, now it shows me 100%. Because it's following side by side to each other, Remi and Pepino Limited, I can just then drag it. You wait for that plus sign like that. You see, this is the white plus sign. The bottom right hand. Until you get that plus sign that looks like that, you can just drag it across like that. But you see, is one thing that you need to change, because you're seeing we are holding this one constant. So we will need then to drag this one to that part right over there. So it can be C17 over $C, $17 like that, so that can represent 100%. And if we drag now this going down like so, you can be able to see what happens right there up to that point. So this part is the profit for the year. Profit for the year divided by the revenue over there gives us 14%. And even right over here, we are saying that if you divide the for Pepino, profit for the year divided by the revenue gives us that percent like that. And that's what we are required to do for part A. So statement of profit or loss and percent, rather the common size statement for profit or loss. Part B, so we can be able to just write over here, A, put it in form of a bracket like that. And then now we move on to B over here, B, like so. And we are saying that with part B, we are supposed to do the same common size statements for financial position, for the statement of financial position as at 30th September 2024. So now in this case, what we're going to do, we are going to hold the total assets as our reference point now. So we're going to base it on the total assets here. So we do the same, we just pick Remi Limited, like that, copy from there. Wait for that plus sign that looks black, like that, drag it like that. And then we also drag, when we wait for it to be black, this is white, our cross should be black, we just drag it down like that, so percent. So we can be able perhaps to put it to center it like that, and even this can also be centered, you can center it like that, and we can bolden it, Control B, like that. So for part B then, we are saying, since we know that now we are holding the total assets as our constant right over here, we can start by looking at maybe perhaps just for completeness sake over here, we can put in these values right here. Like so, it's always good to be complete. We're preparing these financial statements for the second person in mind. That. So the revenue, we are basing it as a percent like that. So even if we move it towards the right like this, at least you can even see that the revenue percent is given over here. The cost of sales is given to us over here like that. Gross profit as a percentage of revenue, you can see 24%, and so on and so forth. But the way it was before, like so, no one would know exactly what we're talking about over here. We are preparing this, and I emphasize on this, for the second person in mind. So let's do that also for this statement of financial position. And so I'll do the same. First of all, let me get the ratios over here like this. I pick the ratio right over here. Which ratio am I talking about? I'm picking the property, plant and equipment. So that value, picking the PPE, and I divide that against the total assets right here. The figure is right over here, like that. And I lock that value. So F4. For some laptops or some PCs, you'll need to press function button. FN, F4. I've always emphasized on that. So you can see it's 29% right there. And if we were to drag it, or we were to do the same for Pepino Limited, right over here, we'd pick the one for Pepino Limited, we'd pick this one right over here, Pepino, and divide that against the total assets, which you can be able to see is right over here. Oops, excuse me, it's not that one. I'll need to pick the correct value. You're seeing we're talking about this value here, the property, plant and equipment. It's that value there. And we divide that against these total assets right over here. And we lock that. We're getting 16%. So now that we have that, allow me to, just pick the entire values, these values right over here. We talk about property, plant and equipment right over here like this, up to this part right here. So copy, drag it down like so. So these are the total non-current assets. Over here we're going to talk about, so I'll drag it just moving down like so. See 0%. And over here we can put total non-current assets. Total non-current assets. Assets like that. And then, of course, we bolden this, Control B like that, and then once we drag it down, it will obviously pick. It will pick what? It will pick the percentages like that. If you double click it, you can see the total non-current assets is right over there. We do the same for the inventory. So we will pick the values right over here, just down below over here. So you can talk about current assets, so non-current assets. So let's go to complete like that. That's non-current assets, and this of course will be the values there. So down over here we pick the current assets like that, enter, and because it's picking from there, so you can just drag it sort of like that, total assets like that, and then we'll pick the values. So we start with inventory, so control B, that we pick the values, we pick the inventory percent, so this is the inventory right over here, we divide that against this total assets figure that is right over here, and we lock it, F4, that it's 17%, and we pick it like so. As you can see, it's 100%. So there's 100% over here because we're basing the PPE, the owned plant, the rights of asset, trade receivables, whatever that is there under the non-current assets section, the current assets section, and we divide it by the total assets. So this should be naturally be 100%. So even if I'm to do the same for here, for the inventory, now for Pepino Limited right over here, it's the inventory and I divide by the total assets right over here and I lock it, F4. See, it's 18%. Then we drag it down like so, and you can be able to see it is totaling to 100%. So this is the part where we need to put double underline. We need to double underline as true accountants. We need to do that. And also this value right over here for the total assets right over here, I need to put it as I put bottom border like that, so that now it can show that is coming to be a total like that. Total assets, control B. Now we do the same for the equity and liability section. It will always be based on total assets like that. And we are saying that because it's based on the total assets, because of course the total assets will have to balance, this value has to balance with that value there. So for this part, I can be able to just come down here and come to equity and liabilities. So just come to equity, where was it, equity, right there, this, and then I can just drag it down like this, like that. And then we proceed on to get the percentages. So the percentages. So this is control B, bold and that. So getting the ordinary share capital. The ordinary share capital, I'll pick the ordinary share capital, which is right over here for Remi Limited. And you can see it's right over here. And I divide that against, I can either divide it against the total equity and liabilities right down over here or the total assets. But we're saying that the total assets is our, it has to balance with the total equity and liabilities. So I divide that against that component right there, and I lock it. That, so you can see it's 10%. Drag it down to total equity, and I can see that that's what I'm getting as total equity. If I'm to do the same now for Pepino Limited right over here, I'll be able to just do the following right over here. We're not dealing with the inventory, we're dealing now with the ordinary share capital. It's that value, and I divide against the 66,500 and I lock it like that so that it remains stationary. Like that. So here I just put sort of the bottom border like that. So that's the total equity. And then I'll need then to now analyze the rest, the remainder, non-current liabilities. So if I pick the non-current liabilities right here, like so, oops, excuse me, I just drag it down, the non-current liabilities, like so. Like that, so until lease liabilities, until trade, until right here. So I'll need to insert here down so that now it can create a space. So these are the non-current liabilities, Control B, and these are the current liabilities, Control B, like that. The non-current liabilities, we talk about the lease liability. Lease liability is right here. We're talking about Remi Limited. Lease liability is that we divide that against the total assets value there. We lock it. And then we drag it down like so. But here we're also seeing there's going to be 10% loans. So we are seeing that it should be in percentage form. So this may not, it should be, we should continue down like that and put the percent. Yeah, you can see now it becomes better, 47%. And then if I drag this one across like that, of course, it's not going to give us the correct values because you're seeing that we've locked this one in. What I'll do, I'll just drag that one over there like that. And once I drag it like that, then now it will give us, rather, this one will give us the correct value because it's this value over the blue over the red. What am I talking about the blue? I'm talking about the lease liability divided by the total assets for Pepino Limited right over there. And once I've corrected that, if I drag this one down, it will actually correct everything like so. So what about then the current liabilities right over here? We're talking about the current liabilities being, or the trade payables, specifically the trade payables. We pick the trade payables right over here. Trade payables, we're talking about right over here. That value, and we divide by that value, like that, and we lock it. So we drag it down like so. And here we talk about the total equity and liabilities right over here. Of course, this one should be bold and Control B like that, and of course double underline. We want it at top and bottom double underline. So this one will be for Pepino. This is for Pepino percent. We're talking about trade payables for Pepino. That one over total assets there, and we lock it 11%. Should continue. I should have continued downwards. Yes, this will be like that. And then I format painter, come over here so it can be consistent like that. Now, that is part A and B. As you can see here is B. Control B. Let me bolden that. Control B. The examiner wanted us to conduct what is called a common size analysis for both statement of profit or loss, the two entities, common size statement for financial position as of 30th of September. Obviously, it has to be for the two entities there. And in part C, we're supposed to advise the directors of Workway Limited on the best company for takeover. And what we can see now, based on that, based on these common size statements right over here, we can see that the best company for takeover is Remi Limited. Why? Because it has a lower cost of sales ratio. And cost of sales ratio is going to be something good. This cost of sales ratio, because it represents a cost which magnifies the gross profit. And to some extent, even if we may have administrative expenses being slightly lower or even higher, the operating profit is also high. And we're also talking about profit before tax is higher than Pepino Limited. As well, we're also saying that the profit for the year is much higher for Remi Limited as compared to Pepino Limited. So in part C, we can come over here and say that, Control B, and we mention something right there, that the best company for takeover is Remi Limited, because it has a lower cost to income cost of sales ratio, cost of sales ratio as compared to Pepino. So that's the statement that control B, like that. So all I just want to be bold, and this is that one. That's all I just want. The best company for takeover is Remy Limited because it has got a lower for takeover. Is Remy Limited because it has a lower cost of sales ratio as compared to Pepino, and you can see cost sales ratio over here. So this one should also be bold and control B, and then you put a double underline like that, because you can see the cost of sales ratio is much lower. That helps it to magnify the gross profit right over here. And having said that, this brings us to the end of today's question 21, where we were discussing about the Workway Limited, which came in December 2024. We are here for you, and thank you for being with Manifested Publishers.